doing today?
Doing well, thank you.
Thank you
How
for
are you
joining
doing?
us. I'm doing well. I get the opportunity to interview you, which is a very rare occurrence. So, tell me a little bit about how was the journey to being one of the top executives at Madison Trust?
Journey really started. I shortly after graduating college, I started working on. I always wanted to work on Wall Street, and I started out as a trainee, an intern on the bond trading floor, and worked my way up, and eventually was a manager in the firm. After about 15 years in the world of fixed income, I actually decided to do something entrepreneurial, and it was to develop with a group of people software for a certain element of fixed income trading. That company was eventually sold to a corporation. So I kind of experienced, the Wall Street type of culture, which is very unique for good or for bad, and then kind of doing my own thing, and then a more traditional corporate culture. And eventually that company was actually sold again. I followed that sale to the company that it was sold to, and eventually started Madison Trust, Broad Financial Madison Trust. So I've kind of seen a lot in terms of different types of companies, different types of groups, different types of markets. I guess that's pretty much my journey.
Some of my favorite experiences with you is when you tell me about all your experiences at Wall Street and impart the wisdom of how it used to be, how it is like that, and where we're really going in this.
Well, it's changed a lot. I think one of the benefits is I saw a lot of things which I think were really worth trying to replicate. We try to do that in a certain sense here, but I also saw a lot of things that, frankly, we try to avoid. And it was a different world in terms of how employees, unfortunately, especially junior employees, were treated. I can tell you very many stories about that. But on the other hand, it was a driven type of environment. It was meritocracy. Typically, people got ahead if they did the job that they were expected to do. Um, but in terms of from a management perspective, as far as feedback, ongoing feedback, in terms of training, and a lot of other things, you really had to fend for yourself. And that's certainly, even Wall Street has changed a lot in that regard. And those are things that I'd like to think that I've learned from and help create a better environment here.
Absolutely, and I can actually attest to that. This is definitely at Madison Trust. We have such a positive culture versus some of the tougher Wall Street firms out there, the cutthroat culture. So
I will just share with you one thing. I mean, this could take up more than the entire interview, but it was one of my first weeks working on one of the bond trading desks, and I had to get in very early, set up people's trading blotters, and answer the phones. And one time I answered the phone, everyone starts laughing. And it turned out that someone had put black shoe polish on the phone. Now, I can tell you, getting shoe polish out of your ear is no easy feat. but it was just, it wasn't as if I was going to march into human resources or anything like that. That was just kind of par for the course. It was kind of,
goodness,
that's how you,
and you
you
would
earn
do.
your stripes. Yeah. Oh, yeah, absolutely. That's when you, so it was a very, very unique type of culture. On the other hand, like I said, it was very entrepreneurial, and people were encouraged to, mostly on their own, to look for areas that they can grow, et cetera, et cetera. And I think that element is what, I'd like to think that, we do a pretty good job of here.
Again, I will absolutely
No
attest
shoe
to
polish. There's no shoe polish allowed on the
absolutely not. No,
in
we do
the
not do that
office.
here at Madison Trust. We actually might be having some team members watching this here today. With that said, and that goes in line with what I was going to ask next, we have an amazing organization here, not just with the business model, but also with the culture. And it is really because of the fantastic leadership team we have here, with you being part of that leadership team, Ryan. What qualities do you think are essential for effective leadership in building organizations like this and overall in the business landscape? Like, we have a lot of things happening right now.
I mean, I don't know if there's like a magic potion for it, but I think there's certain key elements which transcend whatever the particular business is. And number one, communicating clearly. I think that um, you know, employees in any company, they may not always hear what they want to hear, but they want to make sure that the message is delivered in a clear way. They also want to make sure that the message is delivered in a consistent way, that management is not being wishy-washy. And I think a major thing is also for management to admit when they make a mistake. It never ceases to fail me that people that are in leadership positions, they will go to such lengths to cover up mistakes. I mean, when you take a look at, politics, there's a reason that the approval rating in Congress is whatever it is, 12% or something. I mean, just the inability to recognize that, hey, I'm not perfect. We tried. This is what our thought process was, and it turned out to be a mistake. And I think the culture of being open and recognizing when, a mistake was made, I think goes a very, very long way. So I guess that consistency, clear communication, admitting when errors were made, and a dedication to listen to the employees, not to be, hard-headed and when it comes to, decisions, but to get their input and that they should realize that their input matters. So I think that, and finally, I think to make sure that there is a feeling within the company that we're running a meritocracy, that people are moving ahead because of their hard work, because of their accomplishments, and not because of who they know or what school they went to or anything along those lines.
Absolutely. I think that's really important, right? In this day and age, it's because of your hard work ethic, what you put out, the results, and who you are as a person and a part of the organization rather than playing favorites or who do you know, Ivy Leaguers and all that fun stuff. And something I really appreciate about Madison Trust versus a lot of other firms I might have worked before is that. And I do appreciate that from our leadership team and yourself, because every time I've come to you with something, you've always imparted wisdom. The shoe polish story is the first one that I really like that one. I know there's so many other stories, which I would love if you shared today. Um, and we have grown a lot as an organization, 10 years, about 22,000 clients, $4.8 billion worth of assets under custody. Other than all that fantastic stuff we have accomplished, what do you think sets Madison Trust apart from everyone else, all the other custodians companies out there?
I think there are a few things that make us fairly unique. If you took a look when we formed the company, I'm going to take a step back. At around the time we were discussing, thinking of starting a trust company. So my father at the time had just been diagnosed with Alzheimer's, very early stage Alzheimer's. And he was an attorney, he was very organized, he was trying to get his affairs in order. And he was a bit of a visionary. He had an account with a large trust company, a self-directed IRA. And he wanted me to kind of look, he had a couple of questions, whatever he wanted me to take care of it. And I was happy to. And I called the company, I got a voicemail, and someone will get back, within 24 to 48 hours. Someone did. The person, though, was very polite, but really, really had no idea. It was just level one support. And I'm being very generous in saying that, really didn't know anything. And got the question, turned it over. Bottom line is, it took about a week to get an answer for a question that really should have been handled in 5 to 10 minutes. And that really made me feel very, very confident that there's an opportunity here, because this was one of the best known trust companies out there. We were actually dealing with the trust company as well when we started Broad Financial, that we were using a trust company as a custodian. And it just became very clear that there's really an opportunity. And I think what sets us apart is that clearly our focus has always been and continues to be, we want happy clients, we want happy employees. I mean, that's really what it's all about. Another thing which makes us, somewhat unique, I can't, I don't know across the industry how unusual this is, but I suspect it's fairly unusual, is we have no debt, not a penny of debt in the company. And the reason why that's extremely important, again, for our clients and for our employees, is that as a result of that, we don't have to do things out of desperation. So, it's not like, and we don't do things just because, again, there's an opportunity for a money grab. So again, then that hopefully translates into the way we treat our clients and the way we treat our employees, that we want to provide an extremely high level of service, a very, very impressive offering, and to do it at a reasonable price. It doesn't mean we're going to be the cheapest, kid on the block. We're not. But basically to be able to provide what we provide for an extremely fair price. And I think that does make us fairly unique.
Absolutely. And extremely, I had this conversation with one of our investment sponsors earlier today where they're looking for white glove service. And really, and one of their biggest concerns was, hey, if my investors are utilizing your company to invest with me, I want to ensure that you guys pick up the phone. You guys treat them with the same level that we treat them because they're our investors. And I didn't have to say much. I was like, absolutely, because you've done your homework, hence why you're having this conversation with that, because that's how we treat our clients, our investment sponsors, our employees. We absolutely have that exceptional customer service.
Yes.
Um,
And by the way, and it's the customer service, which we are exceptional. It's also the training that our employees have. And I think it's also the fact that our employees feel empowered that if there is an issue and if they think that if the client is right, which very often the case, they'll express that. You know, it's not like, you know, they feel under any kind of pressure to always, you know, just, you know, not to take the client seriously, just to, you know, waiting to get the person off the phone. But in fact, we're looking for a solution and to make sure that the client is happy.
Absolutely. We like to say at Madison Trust, we're proactive versus reactive. And I think that's one of my favorite lines. We don't wait for things to happen. We try to figure it out beforehand. Something I'd love to talk to you about, Brian, is the economy, the market right now. It's a little all over. 2025 is going to be very interesting for sure. What are your thoughts on that, as well as where do you think self-directed IRA, the industry, is heading with all these changes, interest rates, inflation, new administration? It's a lot happening.
There's certainly a lot happening, no question, at a macro level, at a micro level, no question about it. And you know, you mentioned interest rates. There have been some serious interest rate moves, you know,
Just the other day.
just the other day, exactly. And I think that actually all of those, any of that type of volatility, I think bodes well for our industry, because, you know, what our industry is really all about is enabling clients to reach a real, very broad level of true diversification. And, you know, a lot of people in the marketplace think that the definition of diversification is, you know, a nice mix of bonds, you know, of stocks, bonds, mutual funds, and what have you. But, you know, there's a much bigger world out there. The economy consists of a lot of other components, and through self-direction, you're able to actually invest in those components. And I think with the volatility, there is an understanding and an appreciation of how it's important to diversify more. You know, you can read all the so-called experts, and you know, they're right half of the time, they're wrong half of the time. And it's not, so I think people that instead of trying to outsmart the market or predict where the market's going to go, where interest rates are going, where the stock market going, where Bitcoin is going, or what have you, I think it would be a lot, it would be a lot, the time would be a lot better spent to try to just look at our portfolio and say, okay, what's the best mix of assets to give me the highest level of diversification that's going to serve me well long term?
Absolutely. And a lot of people tell me this, well, Donna, isn't it high risk, high reward? But what if I diversify it into some private equity that doesn't make it? But at that point, I say that's a risk you are taking. Hence why due diligence is so important in figuring out what you're comfortable with.
Right. I mean, due diligence, no question, is extremely important. But even within due diligence, I would say what's maybe even more important than due diligence is, you know, let's face it, a lot of people, they'll conduct due diligence and they'll always want to go with whatever the hot, you know, investment manager is, the hot stock or whatever it is. I think it's even more important to see how whatever it is that I'm looking at, how it fits into my broader portfolio. And I think once that decision is made, how I want to be diversified, what I want my portfolio to look like, instead of running after, you know, whatever the hottest investment is, just to make sure I'm always rebalancing it. You know, if one particular component has gone way up, maybe it's time to trim it a bit. And conversely, to maybe add to, you know, part of the portfolio that may not have the same value it had, you know, a while back. But again, staying away from the hottest trends, focusing on what the portfolio looks like, and being consistent with with plan. And the other thing is, plans, like anything in life, doesn't remain constant. You know, as a person gets older and they get closer and closer to retirement, again, adjustments have to be made. And I think those types of adjustments really are the most important thing. And what actually falls into the various buckets is less important than at least creating, you know, what those buckets should be and being consistent with what I want in the various buckets.
Would you agree with the statement that this is not a short-term game, it's a long-term game when it comes to self-directed IRAs and truly diversifying your portfolio?
Well, if a person's 98, I would say it's probably a short-term game. Let's be realistic here.
That's RMD. You should be taking your RMD out by before
exactly. I think for the vast majority, certainly of our clients, and not to knock those that are 98, Wish them many, many more healthy years. But yes, I would say it's certainly a long-term game. And I think the people whose attitude views it as a short-term game usually don't do well.
Mm.
That's just my experience.
And have you seen, and you were aware of self-directed IRAs even before Madison Trust was in existence. Have you seen, what are the misconceptions you've seen about this industry, about this product, this platform?
Well, I'll tell you, I mean, one of the misconceptions is that I think a lot of people self-direction, self-directed retirement accounts, I've seen different statistics, but it's probably no higher than about 2%. So anytime something is that relatively uncommon, I think the first question people will have is it
Is this
completely
real?
legit? Is it legit? Is it, I'm gonna show off my age here, but they used to be these commercials for a tape. Those that know what tape recorders are, you have to be a certain age, but is it real or is it Memorex? That was the type of tape, was apparently the quality was such that people couldn't tell apart, even
Tape
people who are
like,
experts. Tape like a cassette tape. You probably don't know what that is.
I do actually. I have one.
So the famous commercials that they have this opera, star, this baritone, and he would do his thing and a glass would break. And then they would, having taped that, they would actually use the tape and it would break the glass. Anyway, so is it real? So people, the question is it real or is it Memorex? Is this something which is real? And if so, why do so few people do it? And why doesn't, Charles Schwab and Merrill Lynch and, Fidelity and all the other, providers offer that? And the reason is, number one is, there's a lot of the wirehouses have a great thing going.
Mhm.
They've convinced people that stocks, bonds, mutual funds, that's all you need. Here, just you have an app and you're good to go. And the fees start rolling in, and there's very little support that's necessary. There really is. There's really very little. Ours is a product that requires a lot more education in terms of the people that in the support area and the investments area and what have you. So there's more education that's necessary. There's definitely a lot more hand-holding that's necessary. And frankly, there are going to be some people where a self-directed product may not be appropriate.
Mhm.
If a person doesn't have that much in their retirement savings, they're just getting started, it may not make sense until they kind of hit their stride, which may take them a few years into their working life. So it's not necessarily for the masses, but it is, I would say, for the majority of people, and it's a great product. But again, you want to make sure that you're affiliated with a company like ours, just putting it out there, that will give you the time that you're going to need to make sure that you're set up properly and that you're going to be in a position to make the right decisions.
When in all my various travels for Madison Trust, something I always get is two things. It's one, well, we have never heard about this. And then I always tell them, well, it's been in existence since 1975. But, and then the other thing is, well, why aren't Charles Schwab, Fidelity doing the same thing? Or, well, I do have a self-directed IRA with Fidelity. And it's, how would you explain that to somebody?
Right. See, that's actually a misnomer. A lot of people think of self-directed, self-directed is the idea that I can choose which mutual fund to go in or which stock to purchase. That's not what we speak about. We speak about the idea of being able to actually choose an entire array of asset classes that you can now invest in, which you can't invest in a Charles Schwab or what have you. And again, this is not a knock of Charles Schwab. It's, I'm sure it's a fine company, and certainly it's not a knock on what they do, but what they do is very, very limited and in terms of, and it's very narrow in terms of what you really can do in your retirement account. And frankly, I'd say the majority of people aren't even aware that what the IRS permits you to do with your retirement funds.
It's easier to talk about the things the IRS doesn't permit you because that's the list is much smaller versus
right.
what you actually can do.
That's right.
And that's where we come in, right? Where we allow clients to truly diversify into all these asset classes, real estate, private equity. We have some clients who do Arabian racehorses, marinas. They come up with all sorts of crazy.
Exactly. And especially, the idea of enabling people to also invest in things that they really know. People that take real estate, as an example. There's so many people, even if they're not necessarily they're directly involved in the real estate market. But it could be that there's a property that's right near them. They know the property, they know the area, they think there's a lot of upside. And many people don't have the money sitting in their regular personal accounts, but they do have money in their retirement accounts that they could be used, towards those types of investments. And it's really, enabled a lot of people to really pursue their investment dreams in many respects.
Absolutely. And something I really like what you mentioned before is this might not be for the masses, and that's absolutely right. Like we don't see our clients putting their entire retirement portfolio into a self-directed IRA. This is a part of their portfolio where either it's a project they're very passionate about, or this is the first time they can actually get into real estate and obtain those tax advantages, whether it's tax deferred or a completely tax free strategy, depending on the type of account. This is the first time they do it. But people assume, oh no, I have to put my entire portfolio
Correct.
into it.
No, that's a very good point. I mean, first of all, just to be very, very clear, we're not anti-stocks or bonds or mutual funds. They're great products. And,
And that's your background.
yes, so I certainly won't back bonds, that's for sure. But yeah, it's exactly what you said. But, what we just enable people to do is not to feel limited, in any way, shape, or form. And there may be certain people, there's so many considerations, like I was saying before, age being a major one. Another thing that could be a major consideration for people, when not just with their age, some people, a person could be younger, but they want to retire younger or what have you. So in terms of really picking based on your risk profile, based on the amount of years, how long that, we spoke about short term or long term, how long is the long term that I'm looking at, to enable you to really cherry pick the investments that are going to be most appropriate. But again, not in any way to knock the traditional products, because we
Because you
would
need them. We need them too.
absolutely.
It's part of the portfolio. Now, we spoke a lot about how clients can utilize these fantastic products. I know we, Madison Trust, especially in the last few years, we've also started assisting, helping a lot of private companies, especially in a market where access to capital is so restricted. What are your thoughts on that, Brian?
So I think it's been a fantastic service for them. You have a lot of companies that companies that have been around for many years. Many of them, even some of the larger companies, again, that could be hedge funds or private equity firms, real estate firms, or what have you. They could have great track records, and they can have very happy clients. So number one, even their existing clients, many of them, if they had the ability, would want to increase their investment, and they're not even aware of the fact that they can tap into retirement funds to increase their investments. And many potential clients would like to invest, but again, they're not aware of the fact that they can tap into retirement funds where they may have the lion's share of their assets, that the ability to invest. So it's kind of opened the door for both the investors and for the investment sponsors, and it's been very, very effective. Another thing also, which I think, I've heard this from investment sponsors, that people tend to be less fidgety with retirement funds. They're not buying and selling on a regular basis. They just, again, looking at playing the long game, they just seem to be a lot more patient. And patience typically is a virtue for everybody involved in the process. Again, due diligence has to be performed in all of that. But once decisions are made, there's nothing like patience. I mean, you read anything about Warren Buffett, that's like the number one non-honest thing on his list, that it's the idea that he was extraordinarily patient.
Invest and hold.
And it just seems also that people using the retirement funds tend to be more patient.
They do. And that's one of my favorite things when I'm having this conversation, right? It's a win-win-win strategy. For the investors, they have the ability to diversify into something they believe in and obtain that tax advantage. For the investment sponsor, they have easy access to capital, otherwise they wouldn't have access to. And like you said, longer term, less fidgety. And for us, we have fantastic clients.
Absolutely.
And it's just that win-win-win strategy.
3 wins is pretty good. I'll take it.
I love that. Is there, and where do you see us going with?
Well, I'll tell you, I think number one, we're always looking to grow, and we're always looking to improve. So that's something which is a constant. We're also looking at potentially providing other trust services. That's something which we're very, very careful that we don't want to be spread out too thin. Whatever it is that we're doing, we want to be fully focused and doing the best job that we possibly can. I think that what we're going to be seeing, that we mentioned before, that there's such high levels of volatility, in the markets in general. I'd like to think that, as we've grown, we're going to be better positioned to take advantage of that volatility in terms of introducing higher levels of diversification, as we mentioned before, for our clients. And, as we've grown as an organization, I think the idea of also looking to those clients not just us deciding how we may want to branch out, but also reaching out to the clients to see what other kinds of services they'd be interested in.
Amazing. Now, before we open the floor up for questions, Brian, what has been the most rewarding aspect of your role at Madison Trust for you?
Huh. I mean, I would say just, seeing the growth of the company. Um, if you would have seen just a video of, the early days, what the office looked like, what people were doing, how many different hats people were wearing. And, the idea that we'd be able to grow to the point where we are now is certainly extremely gratifying. I think, and another thing is that it's not just the growth, but it's growing in the right way.
Mhm.
And I think our reviews certainly show that, we're growing, but not at the expense of
Quality.
of the quality of the service. And we see that across the board in so many companies. They get off to a fast start, and all of a sudden they're signing up clients in whatever sector they're in, and then it's almost par for the course. As they grow, the customer experience just declines. So I think it's the combination of the growth while maintaining our standards.
Absolutely. And we have grown phenomenally.
Yeah.
I used to hear the stories from back in the day. You know how Microsoft started in a garage? I used to hear the stories of our office when we first started, and it was just one table to now it's 100+ clients. We have 2 office locations, headquartered in South Dakota. Our New Jersey office is where our executive team sits. It's growing every single day. It's impressive.
And my understanding is that in the Microsoft training program, they highlight, what's happened to Madison Trust. It's a model that they aspire to. So,
I like that. I'm going to use that one next time.
well, like I said, it's. I certainly don't have a crystal ball, but I think that as it relates to the world of self-direction, things are lining up to be good for that world because of all the volatility that's out there on every level, on a political level, on a national level, on an international level. So I think the idea, the need, and I think the desire for clients to diversify more is certainly going to be there in 2025.
Amazing. Thank you so much for joining us
Pleasure.
today. This has been an amazing fire. We should do this more often.
Okay.